Right, now let's have a look at Blue Limited. Very basic example. The final assessment issued by the SARS for the financial year ended 31 December 2020, which is our prior year, reflected an assessed tax loss of 120,000, which was accepted by Blue Limited as correct. The board of directors were of the opinion that there would be adequate taxable profit. Therefore, we know we may recognize a deferred tax asset relating to this amount in the future to utilize this unused tax loss, as the company's budget includes new contracts that will generate profit in excess of 3 million for the next 3 years. Now, prepare the current tax calculation, deferred tax calculation, and income tax expense note for the year ended 31 December 2021. Right, let's have a look at the solution. You do have a copy in front of you, Blue Limited. You will identify that I've included our current tax calculation relating to our current year. I've included our deferred tax calculation as well as our income tax expense note. The reason why I include all of this on one page is because I want you to be able to identify the link between your calculations and your note. Right, okay. Now, if we look at our current tax calculation, remember they've indicated to us in the prior year that they have the 120,000 loss. Therefore, in the prior year, they've recognized a deferred tax asset. If you look at our deferred tax calculation for me, please. In the prior year, we have our unused tax loss, 120,000. Therefore, a deferred tax asset of 32,400. They've indicated to us that there will be future taxable profits to be able to use that deferred tax asset. Therefore, we may recognize the deferred tax asset. We debit our deferred tax asset in our statement of financial position. Okay. Now, in the current year, we are able to use that 120,000. Therefore, if you look at my current tax calculation, we deduct the 120,000, which relates to our prior year loss. Because we now use this, we decrease our taxable profit. If we use a loss of the prior year, we decrease our taxable profit. Therefore, if you think about our journal, remember, if you look at our note, if you think about our journal, if we now use that deferred tax asset, we will debit our deferred tax in our profit and loss and credit our deferred tax asset. We decrease the deferred tax asset. We need to take it out because we use the deferred tax asset. Unused tax loss utilized. We now use this. Okay. Again, look at our journal. We debit our deferred tax in our profit and loss. If you think about our T account, an expense, increase on the debit side, decrease on the credit side. If we debit, it's a positive. Okay, don't get confused.